Alright, guys, let me know if you can hear my voice. Just a second. Let me know if I'm audible. If my voice is clear or not. Clear, alright. Um, okay, we'll start in some time. Let other people join in. You guys can put your doubts and make sure that you like the stream as well. Make sure that you like the stream. I already see 11, 12 people within. Give me 1 second. If you have any questions, you can put it on the chat. We'll talk about the index in some time. Let other people join in. If you have any questions, please put them in the chat box. So sharp correction in the small cap. I talked about it here on this candle. I talked about the retest, the test of this demand, and then the failure, which was this exact candle. And this is how you can time the move to the exact candle. And why is this line drawn? Because this is the next weekly demand zone. So obviously markets cannot continue falling forever. So after this weekly demand, we have this one. All right, that is why this line is drawn. And that is why you see some bounce from here. Again, guys, if you have any questions, just put it in the chat box. Just a second, just a second. HDFC Bank. Okay, something interesting is going on in HDFC Bank. We will talk about it. Give me 1 second. Just give me 1 second. Right, guys, my bad, my bad. Okay, we should be live now. My bad. Let's do this again. There's just some issue with the internet. I don't know what it is. All right. So, all right. Give me 1 second. Yeah. So Nifty tested demand and opened lower today. So this is the demand that I'm watching in Nifty. So, so if you see uh, in Nifty, see the demand in Nifty is actually on the lower end here. All right. So we are not exactly at the demand yet. All right. If we are being very technical, but in Gift Nifty, it is already at this demand. So I just want to see for further confirmation. I just want to see what kind of uh, action do we have here. All right. Do we just take off like this, or do we spend some time here, or do we just continue below this? Because if we continue below this, we still have a lot of solid areas here to hold on to. All right. So it's not like things are really bad in the market or something. In Nifty, especially, they are not bad at all. Uh, so, so what is going on in Nifty is we are pulling back. The large caps have pulled back less, so that is some sign of strength at least. So maybe we end up holding this demand. All right. Maybe we just end up holding this demand and we start to climb back up. That can happen. Another thing is the small cap index is still weak because if you see it's still down 1 and 1/3, so basically 1.3, and that is not exactly strong when the other indices are not down that much. But in Bank Nifty, something interesting is going on. Bank Nifty is breaking the EMA yet again, and this is not a proper sign. This is not something that you wanted to see, because what will lead after this is we will probably enter into a slump again. We might start to uh, go around here. All right. So Bank Nifty not that great. Uh, it's breaking down. Small cap index has already broken down, but let's see what happens. I am not buying stocks right now. All right. I am not buying anything. I will buy stocks when I see the small cap index turns bullish. All right. So again, I think we are pushing lower yet again because I see these stocks are falling. Again, this is not exactly my watch list. I'm not really watching anything. It's just from the previous. They're just there from before the previous fall. So all these stocks, nothing really. All right, they can be there for several reasons. Maharashtra seamlessly holding from 1020. So 1020 is here. 1020. It's right here. So I don't know why you are holding this and not exiting this on time. This is not a magic stock. All right. I'm holding this stock from this point. So I can go through these things because I know how this stock behaves. But I bought something here. I bought this here. I also bought this stock uh, around the COVID fall. I'll show that to you as well. But if you're buying so high, first of all, I also bought this stock here. There was some promoter buying here as well. So my point is, if you're buying it here, you have to have an exit plan. All right. Otherwise, your capital is stuck. If you, I mean, I don't understand. Also, why are you buying here? This is 1020. Is this candle? It is this candle. This is right at the supply, and there is no demand inside. The demand is here, maybe here. So first of all, the entry is very bad. Secondly, you're still holding, so I don't know why you're holding this. So yeah, I mean, you can plan your exits if it comes back up. All right. So Nifty tested here. Which sector is looking bullish? Nothing is looking. Come on, really? No sector is looking bullish. Nifty 100, Nifty 200, all these have come down. Okay. Nifty Junior, whatever, mid cap, small cap, everything is down. Media is completely destroyed. Some of these stocks, maybe IT sector is looking good. Maybe IT. But will I buy IT in this market environment? Maybe not. So I bought one stock, which is here. And honestly, I think this is lucky. So I bought this stock here before the fall and I exited on this candle, on the blue candle itself. So that was like around 10% something, maybe 7%. So I bought it somewhere here, 10% exit. So, and this was when the market dropped on this day, but obviously there were demand zones, so it went up and I was out at this supply. So this is the only IT stock I bought. It is still doing good because obviously the sector is strong, so it went back up, but I wouldn't be able to sit through this. Alright, I would have probably exited right at the low. So this might happen even if you buy a strong stock. There might be one big down day and you will be out at the lows and your stock will then go back up to make new highs. So really just wait for the overall environment to uh, just, you know, the volatility should just taper off. It should just die down for a bit for me to consider uh, buying some stocks. All right. Tube investments. So again, strong stock. See, so I used to trade with this mindset, all right, that no matter what the environment is, I will find a strong stock to buy, all right, because I could find a strong stock to buy. But what is the problem here? Let's say the small cap index has fallen down here. So I'll just remove everything, all right. So let's say it broke through this demand. Anyway, this demand anyway wasn't some sort of big demand zone. It was just some sort of a continuation of the fall itself. So did not make a new high. So comes down to this demand and it starts pushing. So and this is the next demand right here. So I might buy a few stocks here. I might buy two stocks here which are strong, which did not fall in all this. But when again the market falls like this, those stocks will fall. And this happened with me. So I bought this stock. Obviously, I'm not holding it anymore. I bought this stock here, here, and here. And on the same day, it went down. Now I can't sell it on the same day because we're not allowed to sell on the same day anymore. So I had to sell it on the open next day. And what happened? It went down 15%, even though it was very, very strong. So clearly, even stronger stocks might break down. And what happened? It recovered all the way back up. All right. So wait for the market environment. All right. Don't buy strong stocks in any environment. All right. What if it continues to worse? It continues to get worse. Your strong stock might fall and never come back. All right. So I just tried the stock. I haven't bought anything else. So my entire point is just wait for the environment to get better. All right. You don't need to continuously keep buying stocks, whatever the environment is. I have to buy something. I have to buy something. See, finding a strong stock is not an achievement. So it's not that big of an edge as you think it is, to be honest. Because I used to think that all I need to do is find stronger stocks. But it's not that big of an edge, uh, to be honest. Because what happens is sometimes the stocks that fall the most, they recover that quickly. So look at something like this. Nobody will say this is a strong stock, but it just went back up, just 210 to 260, just like that. All right. So sometimes this might happen. You have to find strong stocks, let's say just before the breakout. if an overall range is strong, then it is not exactly safe from the market volatility. All right, it might go down, it might come back up very quickly. That is a different thing. But you have to find the exact spot when it's strong. So let's say we are in an uptrending market, and suddenly there is 2 3 days of correction, just to some demand, just to maybe the EMA, whatever it is. But this stock is not falling here. So let's say during this time there are 2 3 days of correction, but this stock is not falling, and then the market starts to go up. So then there's a chance that this stock will start going up. So ultimately you're making money when the market is going up. So finding strong stocks is good. It is important, but it's not that big of an edge, to be honest, because ultimately everything you make is dependent on the market. So strong stocks, not that big of an edge. All right. uh, and if you have any sound trading system, it should automatically target strong stocks. You don't have to find it by yourself. So whatever trade I take, whatever trades I take, it's all above the 50 EMA. So anything above the 50 EMA is strong, but things break down when the market falls. So I don't exactly have to go out. See, I will never touch this stock. I haven't seen this. I traded this once, maybe here, or maybe it was just on my watch. I don't remember. But since this point, I did not even know that this stock is still listed or not, right? Because it never shows up in the watch list. So, so it's not because I'm purposely looking for stronger stocks. If I'm scanning like this, let's say I'm scanning like this, I'm just going one by one without looking at the name of the stock, and I come across this stock. I won't even care to look at the name because it's very heavily downtrending. So what would I do with the name? All right. So I don't even know what stock is this, and I'll just go past it. Again, same thing here, nothing. Same thing here, same thing here. All right. It's nothing. You don't even have to know the name of the stock. All right. So again, but what I try to do is I try to notice patterns in the stock. So patterns over multiple stocks, if they are looking the same. So basically, and see, this is just supplemental information. All right. It might help you just it might help you just squeeze out a little bit of more outperformance, but I don't think uh, uh, it's that impactful on your overall return. So what I'm saying is, if you see since October, so October is somewhere here. All right. So just make sure that in every stock you're looking at October here. So if you see since October, apart from a select few sectors, stocks haven't moved up. All right. And October, November, it's a long time since October. All right. So apart from these select companies which were very very strong, many stocks, they haven't really gone up. They're still below that level. All right. They're still below these levels. So you look at these stocks, they are already in a sort of a correction phase. All right. So again, okay, let's say not October, let's say January this year, because that is a more uh, let's say a more recent time, because October we had a big run after October in November. So maybe some stocks went up. But since January, a lot of stocks have actually entered this bear market sort of a structure, all right, where they fell, but since there were so many corrections, so I'll show you what I'm talking about. So look at, so let's take this phase out because we had a big rally after it. But look at stocks from here, from end of December. One drop here, there's a second drop just 2 3 weeks after that. This third drop in the fourth day from this one. Then after 1 or 2 weeks again we have a big correction. Then we have a big range, then the big drop. So since December, there have been a lot of big drops, which means money is being taken out of some stocks and it's going into other stocks. And the move on the upside is also very less. All right. So, uh, so the point is, that from December on this in this entire phase, some pockets in the market, they have been seeing some correction since the last 2 3 months, and you will notice these things once you watch the stocks regularly. You will see that a lot of these stocks, look at these stocks from December this point, a lot of these stocks are already in a bear market. All right. So a lot of pockets in the market. So again, something like this, they haven't moved up since December. They were already in a bear market. Again, something like this, already in a bear market since like 20th December. All right. Bandhan Bank, uh, even this one, just one breakout and then completely switched off again. So a lot of these stocks, they haven't showed up in my watch list at all. All right. Something like UPL is obviously just continuously falling. But since December, very few stocks have done well. Oil marketing, oil companies have done well. Maybe infra companies have done well, and maybe some defense stocks have done well. All right, and maybe some textiles, not all textiles, because I've been watching textiles very closely. Uh, some textiles have done well, but not all of them. I think they have also fallen with the current fall. But mostly, if you see, you will see stocks that look like this. All right. So these corrections, they don't happen overnight. All right. Something, or it just happens in groups. All right. Some group will start to taper off, others will continue. When this happens, you will see the index is significantly slowing down. The candles are more overlapping. All right. You won't see big gaps. You won't see a big gap up in the small cap index. You won't see 2% gaps, 1% gaps every day. uh, you will see the small cap index is opening down, it's closing in a doji. Again, same thing. So this means that overall market is not that strong. Something, or some sectors are not going up. All right. So look at the clear difference between and this is all an attempt to study how the index is moving. Look at the difference between this move and this move and this move. All right. So these two moves, look at the gaps, look at the solid gaps. Every single day the index is gapping up. All right. Every single day. And in the first week of November itself, I remember making 7 8%. All right, in this entire move up, because everything just spiked up. All right. But in this move, I made nothing. All right. Because not a lot of stocks were going up after this entire carnage. This move, a lot of stocks were bearish. All right. So my point is, don't just look at the index as a chart. All right. Try to understand why was it moving so fast here, and why is it like uh, coming down now? Because if the breadth is getting more shallow here and here, if stocks are starting to downtrend here, so what happens is, let's say, and this might be a bit complex, but it's really not. It's kind of easy if you look at it. So if you see, every time the index is falling, it has big candles on the downside. That means a lot of stocks are falling, because unless a lot of stocks are falling, there is the index won't form a big candle. All right, I've talked about this so many times. Unless a lot of stocks are falling, the index won't form a big candle. That is why you see on the upside, when the candles are small and the gaps are small, it means not a lot of stocks are going up. So even though you must have seen the index going up, index is going up here, but stocks are not going up. All right. So a lot of stocks are falling. So index is making a big candle. That is why if you see from all the big drops, after all big drops, you see a big bullish candle whenever it ends. All right. Whenever it ends, you will see a huge wick or a big bullish move immediately after uh, multiple days of drop, if it has ended, obviously. Now, why does that happen? Because after all the stocks fall, they also recover quickly. All right. So they don't take time to recover. But when the recovery is done, what happens after the recovery? Now they are coming back to the previous supplies. All right. So now some stocks will fall back, some stocks will go sideways, some stocks will go up. So now the index starts to slow down. All right. So when this phase happens, try not to trade that much, because you won't notice a difference among stocks, because everything in a phase of high volatile action, everything starts to uh, look the same. All right. So in the past, let's say 4 or 5 days, look at all the charts. They look like the index. All right. So let's ignore these stocks. Let's look at small caps. So look at all these stocks. They look just like the index. Look at the stock. They look just like the index. All right. Big candles, no matter if it was downtrending, uptrending, they have fallen, they have gone back up. Now, if the index goes sideways, you will start to see some divergence in different sectors. Something goes up, something goes sideways, something falls. All right. And this is the time when you want to participate. So hopefully this is clear with everyone. It's a very basic market breadth theory. All right. So again, this is not the time to buy stocks. I will show you countless examples where you have a big up move and then we fall again. Look at this. Look at this up move right here. This is huge. This is 2% after a 2.5% fall. So entire fall recovered, then we are down again. All right, because stocks, when they go back up, they go back to supplies. All right, they doesn't one candle doesn't mean that the trend has ended. All right, again look at this move. We recover from the lows. We recover almost 6%, 5.5%. What happens? We end up making a new low. All right, so again, every time the recovery won't be like this. All right, so just hold on to your capital. Don't try to be a hero in every market. All right, again this one, look at these recoveries. This is how much? This is approximately 5% in one day. Then this is also how much? This is 5% in 2 days. All right, this is 5% in 1 week. These are huge moves from the downside. What happens? We start going down again. All right, so until and unless there is some bullish structure, and look at how far we are from the EMA. We are already 6% from the EMA itself. Forget about the last supply. From the last supply, we are up almost 9%. All right, so one day you see some stocks go back to the highs. Don't buy them. All right, just hold off. You're stuck in RK forging, so you should exit these stocks. This is your test. Buying stock, I've told you multiple times, buying stocks is very easy. Anyone can look at a contraction and whatever and buy stocks. You will only make money if you're able to exit. I posted in my server like almost every week. I post some example of a stock which is just breaking down 25-30%. From day one, I tell them to just take your exit seriously. When the market goes up, everyone makes money. All right, so you have to exit these stocks. All right, don't and what happens is, after multiple months of bull run, you get used to stocks going back up, and this is what gets you caught. And this is where the most harm is done. So if you see, look at this rally right here. Who would have thought the stock will go from 170 to 30 rupees over the next 2 years? No one. If I just replay the chart here, let's say I replay the chart here, and I'm looking at this chart. All right, so let's go back 2 days, maybe one more day. I'm looking at this chart. So it's at 160 right now. Can any logical person tell me that this is going to go to 30 rupees in the next 2 years? Nobody knows. This is how a top is made. Look at this top. All right, it went from 12 rupees to 160 rupees, and it went back to 50 rupees. All right, and basically after you get caught in something like this and you don't exit, your trading career is over, right? Because this is it started falling on August 2015, and it went back up here in 2017 December. So 2.5 years your money is locked. So 2.5 years basically means a big chunk of your time. right? You have to do something for 2.5 years. You cannot just wait for your capital. All right. So exiting stocks, even if they're down 20%, just get out of there. 20% is nothing really. Once the market recovers, you saw how many stocks went up 20% yesterday. It's nothing. All right. So you could not exit at 5%. All right, exit at 10%. You could not do it at 10%. Exit at 15. You could not do it at 15. Exit at 20. All right. Don't wait for it to go back down to 60%, because when your stock is down 60%, the market is probably down 40%, and from 40, from let's say 100, if it comes down to 60, this is a cut of 40%. But if it goes back up, this is a gain of 80%. All right. So if you are out even at 20, you are still at 80. So from 80, if you gain 80%, it's 121 something. Yeah. So it's more than 100. All right. So 80 on 80%, that's 64. That's 140 something. All right. 144 maybe. So whatever the maths is, maybe it's 75% or whatever it is, right? I'm just giving you an example. You don't have to hold stocks if you're not comfortable looking at them. All right. And I will buy this stock right here. All right. I will buy this stock right here. Right in this wick, I will buy the stock. But what happens after that? We get a breakout. Okay, now we get a continuation. Now I'm out. I am out right here. This is the point. 50 EMA is gone. I am out. I don't care if it's at my cost, above my cost, 200% above my cost, below my cost, whatever. I bought here. I'm out here. Now, when will I not? When will I look at the stock again? If it comes back to these highs and maybe forms something like a base here. Now, does that happen? Price here, very extended. I'm not buying here anyway. No base. Everything here is far from the EMA. Again, breaks down. Even if you buy here, even if you buy around the EMA, just exit when it falls below the EMA. What happens after that? Stock basically never comes back. All right. So take your exits very seriously. That is the only thing that will make you money. Buying contractions, buying VCPs, buying smart money entry, smart money exit. Everything is all right. Everything works. Even a trend line will work in a bull market. All right. Even this is working. All right. Even rectangles, boxes, whatever, do whatever. You see how simple the chart is. Let me just show you any random chart. Let me show you any random chart. Let's take the stock. How simple is it to trade the stock? It really doesn't need a lot. All right. You draw a box. You try to buy above the EMA. Just buying a breakout is stupid. I know that. So basically, if you're buying a breakout, that will seriously limit your returns. But if you find some way to buy just before the breakout, you catch this again. You draw a box here. You catch this again. You draw a box here. You catch this. This time it fails. You're out. Now the boxes are going downside. Just the simple theory. All right. So again, what happens in the range bound market? You just take a few losses. You draw a box here. It tries to go up, go up, go up, fails here, exit. Again, you draw a box here, goes up, tries to go up, fails here, exit. You're not just buying one stock. You're buying 10 stocks like this. All stocks won't fail. All right. So it is very easy to make money with swing trading. All right. A lot of people they are not very serious about it. All right. They look at the markets going up. One fine day they will wake up. They will find some stock to buy, and they will buy the stock. They will see it's working out. So now we are trading swings. What happens when the market falls? You get stuck in some stock. You don't know how to exit it. It's going down. Okay, let it be. The company is not good, not bad. We'll hold it. Market goes in a bear market. Your stock is down 40%. Now you're a long-term investor. You don't even know what your stock does. So take it seriously. All right. It's not a game. Just because you're buying stocks and they don't go to zero in 1 week or 1 month, that doesn't mean that you can afford holding them. All right. Just because they retain their value at the same price doesn't mean that you can just hold them and keep them. All right. So it's very important to actually take it very seriously and treat it like a very proper trading system. All right. Yeah. So exit your stocks because if the market continues to fall here, it won't be pretty. All right, because you're already down like 15%, I guess, to the low. Yeah, 15% right now. We're down 13%. If this goes, if this goes, this is right here. So basically, we might see a bottom like this if it happens. But if all this starts to go, if this entire range starts to go, then then it's a very dark place beyond it. All right. So you don't want to be stuck here. And look at all the small cap moves. It never like the trends are long, but the drawdowns are also big. All right. Again, if you see overall the progress, we crossed the 2018 high here, but we came back down. So technically, we crossed it here. All right. So if there is some bad, uh, if this gets stretched, the down move gets stretched, we can easily come down to here. At least it's the previous high. All right. So don't think that just because we have gone up, this is past. This is past. All right. Markets will get extended. Markets will correct. They will get deplete. So basically, they will get extended on the downside. Then they will bounce back up like a spring, especially small caps. All right. Have you seen the fundamentals of a small cap company? It grows like the small caps will start to grow. This quarter they're earning 10 crores. Next quarter they're earning, next year, the same quarter, they're earning 50 crores. This is why you see just one way moves when the environment is good. So just the fundamentals are out of whack. All right. The growth is super fast. That is why you see these moves. And then when things get stretched, when there is no accountability for these smaller companies, you can't assume that 5,000 companies in the market all are good. All right. In fact, 95% of them are not good. So things get stretched, they will come down. It's just natural. You can't blame the market for that. All right. So don't get lost in the wave. That's what I'm saying. And this is true for the downside as well. When you see this, all right, you won't be able to buy stocks here. All right. Because on the back tests, when you back test it, it looks like okay, we are falling very easy. I'll just buy above the EMA, or everything is very easy. It is in fact very easy. I do agree that if the theory matches the practice, it's very easy. But this is February and this is August. Maybe you buy something here as well. All right. But technically, you have to sit for like 4 or 5 months without touching your money. And you know that's the right thing to do. So it's not like you don't know why you don't have to do it. You know exactly why you don't have to, why you don't have to do it, because things are falling. So obviously, I don't have to touch my money. But 5 months, all right. So these 5 months will get to you, all right. You won't, you will end up buying one or two stocks here and there because they will look good, all right. So you have to stop doing that, all right. So don't get lost in the wave. Treat every pullback as the end. All right. So all of these pullbacks, I'm not expecting it to go back up. I don't know what will happen. If it goes up back up, well and good. It won't take more than 2 3 days to make this money back if you're exiting properly. If you're not exiting properly, it will take you 1 week. But if you're not exiting here, there's a chance you might never see your stocks back up. All right. So anyway, uh, uh, take your exits very seriously. Anyone can make money when the stocks are going up. Everything is going up. Already pick a random stock. Don't even need to see the name. All right, I will buy this stock if it goes up here. And if the market is good, it might go up like this, and I will just buy it and I will make money. But you have to learn how to save it. All right, you have to learn how to have that money all the time. If you don't exit, you won't have it after some time. It's the same thing. So basically, it's like you can sit through this, it comes back up. You can sit through this, it comes back up. But there will be a time when it stops coming back up, and that does not mean that you will just do it in some other stock, because if it stops coming back up, your money is gone. So now you can't do anything at all. You're done right there. Without taking a big hit, you can't do anything. So it's not like you have an alternative then. So it's not about the monetary loss, the percentage loss. It's not about that. It's about it's about the fact that you won't have the money. You won't have the uh, guts to exit your stock at minus 50%. All right. So technically, you are done completely. So this is the problem. Money is not the problem. You can just sell it. You can build it back up, but you won't, because you are addicted to seeing your stocks recover from lows. All right. So be scared of a downfall. All right. Be scared of a big drawdown. That is, don't be. See, whatever money you make, let's say you make 100% profit uh, over the past 1 year in the bull market. Just be comfortable with giving 20-25% of it back. All right. Just be comfortable with giving that back. So whenever a fall like this comes, exiting at a 5-7% loss, it's very easy to for you psychologically. All right. The main problem that happens is you are seeing your demat value go up, and you see that value. Let's say it started at 10 lakhs here. Now here my demat value is 30 lakhs. All right. Now suddenly we drop 5%. Now my demat value here is 26 lakhs. Let's say you drop 10%. It's 27 lakhs. Here, I know the correct thing to do is to take my money out completely. But I've seen 30 lakhs. So maybe let's just wait and see if it goes back up, because why not? What happens in the next 4 or 5 days? From 27 lakhs, now it's at 24 lakhs. Now you have a big cut, you have a 20% cut. So now you cannot take it out. All right. You cannot bring yourself to take this out. So stop looking at the number at the highs, because that is not yours. All right. If the number at the highs is yours, you will exit at the highs. So how will you catch the next move? So if I'm booking my money here, if I've made a lot of money and I'm booking everything here, and I'm not buying anything else, I will miss out on all of this, because I can't buy stocks here if I'm exiting here. All right. So stop looking at the amount that you make or that you have around the top of these rallies, because that is not yours. Just cut out 5% from there and be comfortable with that. If I have 10 lakhs, I know my actual value which I will take home is around 9.5 lakhs. All right. 10 lakhs is just mythical. 10 lakhs, I will have 10 lakhs when my demat value is actually 11 lakhs. All right. Because at the top, it doesn't matter. It lasts for like 2-3 days, 1 week maximum. All right. So be comfortable with looking at that value erode. Just expect it to go. All right. That is how you will be safe. All right. So enough discussion about all this. I will take a few big questions and we'll end. It's already about 1 hour of this lecture. Again, guys, make sure that you like this stream as well. What to do when Nifty spot seems to be a demand and Nifty future doesn't? Just wait for the reaction. You don't have to buy at the demand. So just wait for this reaction to happen. If you'll notice, this was the first time small cap came back to the previous base. Yeah, so this is the first time the small cap broke the EMA itself. So this EMA, it did not break the EMA since the past 1 year. So this is in fact bad. So maybe some sort of sideways action will be there. Maybe it just continues down. So this is not the time to buy stocks. All right. So stocks short karoge? No, because it has already fallen. So mid cap index already fallen, and most of the juicy shorts happened in the mid cap. So most of the fast moving FNO stocks, they are mid caps. So if you see all these stocks, they have already fallen. So now I don't know which one is weaker. All right. So maybe they just come back to some. See, shorting does not last forever. You catch this drop or you miss it. You cannot expect it to continue down unless the index also shapes up that way. All right. So let's see what happens. Um, but I won't short anything. All right. All right. So we'll stop here. Hopefully you guys learned something, and I'll see you guys in the next live. Make sure that you follow me on Instagram if you haven't. All right. And have a fun weekend. I'll see you guys.